Good afternoon, everyone. This is Kiki Daily. It's time to catch up on the latest news in the world of finance and markets. Today, U.S. stocks are opening lower, and we could be looking at a potential second day in the red. Investors are eagerly awaiting fresh jobs data and keeping a close eye on the path of interest rates. Tech stocks are leading the way down, with the Nasdaq Composite down about 0.4%. And both the benchmark S&P 500 and the Dow Jones Industrial Average have also fallen roughly 0.3%. Now let's talk about the market. December didn't start off on a winning note, which is putting November's roaring rally in the rearview mirror. Doubts are surfacing about the notion that the Federal Reserve will soon call an end to rate hikes, and this is dampening enthusiasm among investors. They are now looking to upcoming data for evidence that the U.S. economy is headed for a so-called soft landing. Today, all eyes are on the reading of job openings in October. It's expected to show slowing demand in the labor market, alongside the ADP private payrolls numbers tomorrow and the crucial monthly jobs report on Friday. The data will be scoured for any catalysts that could potentially change the Fed's policy course. These numbers have the power to sway market sentiment, so it's definitely a key focus for investors. In other news, Moody's, the credit rating agency, has cut its outlook for China's credit to negative. The reason cited is the growing levels of debt as Beijing tries to fix a spiraling property downturn. This development has led to a sell-off in China stocks as overseas buyers head for the exit. It's a situation worth keeping an eye on, as it could have potential implications for global markets. Now let's shift our focus to the shining star of recent days, gold. Gold prices have been on fire, hitting all-time highs as bond yields continue to decline. Just on Monday, spot gold reached an incredible all-time high of $2,135.439 per ounce before settling around $2,027 by midday. Bloomberg Intelligence senior macro strategist Mike McGlone believes that gold is in the early days of a bull market, breaking out to new highs. So, keep an eye on this precious metal as it continues to make waves in the market. And finally, we have an interesting development from the Federal Reserve. Allianz chief economic advisor, Mohamed El-Erian, has called attention to the fact that the Fed seems to be losing control of its messaging on interest rates. While the Fed may tolerate higher inflation instead of pushing the economy into recession to hit its 2% target, investors are overreacting by pricing in sharp rate cuts. It's a delicate balance for the central bank, and their communication with the markets needs to be solid to avoid any potential disruptions. That's all for now in the world of finance and markets. Click like and subscribe to stay tuned for more updates as we keep you informed and engaged with the latest happenings in the dynamic world of finance.